Let's take a look at Lilly as well. The price target goes to $785 from $740. That's at Goldman Sachs. They raised their forecast for GLP-1 drugs, obesity therapeutics, to $130 billion from $100 billion. We're looking for 5 straight months of gains now on this name. Bren, this is one of your new buys. We haven't seen you in a while. You bought this in April, so you now own Lilly.
Yep. We bought it on a slight pullback that happened in April. We've been skeptical of GLP-1 drugs early on, so we were not involved, but we do think they do have the potential to be pretty transformative, and so we took a small position in Eli Lilly as a result. Obviously a direct beneficiary. It's more than 50% of their revenue that's driven by GLP-1. So we continue to think that there are legs to the story here, but obviously there is a lot of hype, so we can't ignore that fact. But we think it's real, and it does impact, could have a very transformative impact on a lot of people. Okay,
UnitedHealth, the top structural long position, according to Baird, almost $600 is the price target. They go $597 if you want to go, to the actual exact number. Kevin, you own this name. What do we think? And this basically follows some comments yesterday by UNH's CEO at the Bernstein conference.
I think it's a little overly optimistic. I would still tread carefully in this name. We've owned it for a really long time. We're not in the position to dump it and bail on it just yet. But I hope from God's mouth to his ears. I don't share that optimism, and I would look for bigger pullbacks before you add to the name.
Brenda, Abbott initiated a buy at Goldman today. Price target $121. That's looking for a 20% jump, and they've been down 4 days in a row. Maybe they snap it today. We'll see. It's up 1 1/3%.
Yeah, so Abbott has been a frustrating stock. I mean, it's been a company where there was huge benefit from COVID tests, but it muddied the results when COVID tests began to slow down. But when we look at the underlying business, it's continued to be quite strong and had good organic growth. So we think that as time goes on, the COVID test impact will be lessened. There'll be more focus on the actual underlying business. So we agree with Goldman here that it's not a bad moment.
You're a recent entrant into this space through Pfizer, which at the time you had called one of the best, if not the best looking stock in the market.
Yep.
How are we thinking about this
From
today?
a bottoming standpoint, it's the worst. It's literally the worst of all of the large drug companies. So what I meant was the forward opportunity.
Yes, it was so bad it was good.
So bad it was good. Still is. Still horrendous, but getting less horrendous. Last week, Pfizer made shareholders very happy by continuing in what's now become a string of cost-cutting announcements. Initially, they said they would cut $4 billion in costs. They said, oh, yeah, you know what, actually, maybe another $1.5 billion. So long as that's the direction that they are headed on the cost side, I think people will be willing to wait on the potential revenue growth, which we think comes from the Seagen acquisition, which is probably not at all priced in. Seagen came over post-closing of the acquisition with a ton of patents in oncology. That's probably going to be Pfizer's next growth market. It's not going to have a revenue impact this year. It's probably more of a 25 and out story. But we think the stock will probably start to price that in sooner than when it actually comes. So that's the story with Pfizer. If you like cost cutting, they're getting really good at it.
All right, stock getting a bump. As we speak, J&J was reinstated today at neutral at Goldman Sachs. 160 is the target. Steph, you just sold this name last week, right?
Yeah, look, I like spins, and they did spin out their consumer business, so I was excited about that. But they actually have a lot of patent losses to overcome. And so as a result, their earnings and revenue are only going to grow low single digits at best. So I think you have a little bit of time. They do have a great balance sheet. They got $80 billion that they can make M&A with, and I think they're going to. But I think it's just going to take a long time to translate into better earnings, better revenues, because right now it's below their peers. So I know at 14 times it's cheap, and a 3-4 yield is probably interesting to you, but I just think it's probably dead money. I much prefer GE Healthcare.
No go?
We sold it a week before Stephanie, and we rotated into Amgen.